Good morning, students. Today we will be starting topic house property, and we will be discussing the theoretical part of house property, and also we will be solving some questions. So let's start. The house property section starts with the section 22. Okay, the basis of charge of the section is given in the section 22, and it provides some conditions which should be followed. Only then we will be considering income as income from house property. Okay, so what are the conditions? Let us see. The house property which we have, the house property when will we consider a property as house property? Only when there are four walls, yes, and a ceiling is being attached with it. Other than we'll be considering it as a house property. Okay, this house property should be consist of a building or land appertenant thereto. That means it should be attached. The building should be attached with the land. Next is the taxpayer should be the owner of the property. So he should be the owner of the property in the year in which he have earned the income. That means the previous year. If he is not the owner in the assessment year, also then it will be considered as income from house property only. If say he had a building, okay, in the previous year he should have earned an income of 10,000, okay, from this building. But in the next year, in the assessment year, instead 2019, okay, in the assessment year 2020, he have sold this building. But even then, this 10,000 will be considered as income from house property, okay, in the assessment year while calculating the taxability. Understood? The next is the house property should not be used for the purpose of business or profession. Okay, it should not be used for business or profession purpose. Then the income will be considered as income from house property. So now let us see example that I have a piece of land, okay, and I have taken a piece of land on lease, okay. From a person I have taken it on lease. So if I have taken it on lease and then I have constructed a building in there and I'm earning rent from this building. So will this income considered as income from house property? The answer is yes. It will be considered as income from house property because only the land has been taken on lease. I am the owner of the building. Yes, the building and the land are appurtenant thereto, that means they are attached, and it is not for business or profession purpose. Yes, then it will be considered as income from house property. Now let us see another example. Say I have a house, okay, and that house A is the owner of the house, okay. A is the owner of the house, and that house has been taken by, okay, it is the house, and this owner is A. This house has then been let out to B. Okay, so B is the tenant here. B is the tenant here. He has been given the house on rent. Now B, what he does, he has sublet it to C. Yes, he is the subtenant. He is the subtenant. That means B has sublet it to C. Yes. Now C, B is also earning rent from C. Yes, he is getting a rent, and B is also providing rent to A. So from these rent, whether it will be charged on the income from house property, these rent which A is getting from B, yes, it will be considered as income from house property. Okay, but this income of B, whether the conditions are satisfied, you see, the building and the land are appertenant thereto. Okay, the taxpayer should be the owner of the property. Whether he is the owner of the property, no, he is not the owner. He is a tenant here. Yes. So this condition does not satisfy. That means it will not be charged as the income from house property. This rent will not be considered as income from house property. Yes, and it will be this rent will income will be taken as the income from other sources. Okay. So when a tenant sublet it to other tenant, the income for the rent which he earned from the subletting will be considered as income from other sources and not income from house property. Yes, I hope all these three conditions are clear. Now coming to terminologies of the house property. The first is the annual value. See, a house property, a property of the owner has a value, the actual rent which you will be receiving, okay, from the property or renting of the house, okay, it will have a value and that is known as the net annual value. Okay, every house property will have a annual value by which you will be receiving by letting the house on rent. Okay, but a self-occupied property, NAV will always be nil. We need to remember this part, that NAV of a self-occupied property is nil. And the municipality tax. Now coming to municipality tax value. This value of the house property is calculated by the municipal authorities. Municipal, see, every city has a municipal authority, right? So this municipal authority, they set a value of the house property, and that is known as municipal value, on the basis of which the municipal taxes are being calculated. Okay, on the basis of which municipal taxes is being calculated. See, if it is being said in the question that we will be charging 10% municipality taxes, so this municipality 10% municipality taxes will be calculated on the municipal value. Okay. Now coming to the fair rent value. Fair rent value is a rent which is similar in a property, okay, with a similar features. That means in a locality, if we have a house, if we have some houses which have similar features, then those houses rent will be same. Okay. Now coming to standard rent. So what is standard rent? The standard rent is determined under the Rent Control Act. See, there is an act, and under this act some standard rent has been set. This act as this rent which is being determined by the Rent Control Act, it acts as a ceiling above which, and that means above this amount, say if it has been set as 5,000, above this 5,000 amount we cannot charge a rent. Okay, so the standard rent acts as a ceiling for the house property. Okay, the standard see the meaning. The standard rent is determined under the Rent Control Act. If the standard rent has been fixed for any property under the Rent Control Act 1948, the property owner cannot charge a rent higher than the standard fixed rent. Yes. So these terminologies, I hope the terminologies are clear. In here, see the NAV of a self-occupied property is nil. Yes, and if say a person has more than say more than two houses, then say he have three houses. Okay, these three houses are used by him for for residential purpose. Okay, even then these three houses he will not be getting the exemption. Okay, that means the NAV will not be taken as nil. What will happen? The income tax, this provision says only for two houses the NAV will be taken as, the net annual value will be taken as nil. Okay, for the third house which he is, even though he is residing, it will be deemed to be let out. It will be deemed to be let out. Yes, as it will be deemed to be let out, we will not be getting exemptions, so we will be calculating the municipal value. Yes, then fair value and all. Yes, is it clear? So now let's move to the next part. Now coming to composite rent. If letting out of building along with movable assets, that is machinery, plant or furniture, okay, etc., forms a part of a single transaction and are inseparable. The composite rent shall be taxable on the head, profit and gain from business or profession. That means, let's see an example here. Say there is a PG, that means paying guest. I've taken a PG. In this PG, I will get the room, yes. Along with the room, I will be getting electricity service, yes. I will also be getting the food services here. On the rent which I will be paying, say I have paid 5,000 for this PG. So this 5,000 includes the service of the room, the electricity and food. Yes. So here, if it is possible to apportion it, to separate the room with the other services, okay, the value of the room with the other services, then what we will be doing, this for this room, the income which we will be earning, say if it is 3,000, will be taken as income from house property, and these other services for electricity, food and all, it will be taken under PGB. Yes, profit and gain from business or profession, or income from other sources. It will depend on the main intention, okay, whether to charge it as under PGBP or income from other sources. If we cannot apportion this part, okay, the room amount along with the other services, then it will be the main intention will be seen. What is our main intention, whether our main intention is for business purpose or some other. We'll be seeing that what how we'll be seeing the main purpose, okay, with another example. So the main purpose will be seen if we cannot apportion it, and on the basis of that it will be going on the PGBP or income from other sources. Okay, now let us see another example. Say, let me rub this out. Say there is auditorium. Okay, I have the auditorium of a university. So it is of Guwahati University. We have the auditorium. Okay, this auditorium will have the chairs and various projectors and all. Yes, various facilities will be given along with this auditorium. Yes, so if this auditorium has been rent out by GU, okay, if GU have rent out this auditorium, so in that case, the rent which the Guwahati University will be earning, yes, that will be taken as PGBP income or income from other sources. Just saying, if it is not separable, that is, we cannot apportion it. It will be taken as what? It will be taken as income from other sources. Because why? Guwahati University is the educational institute. Okay, so education there they have the auditorium. Why? Educational institutes. They have the auditorium because they require it. Okay, if they have rented it out to some other organization for conducting a seminar, yes, and in that case it will be their income from other sources. It is not their business of renting out the auditorium. Yes, they require it for their purpose, but if it is vacant, then they can let it out. Yes, so it will be considered as income from other sources. In case we can separate out the chairs, the furnitures, yes, and other all the fixed assets from the auditorium. We can separate it out from the room, which is of the auditorium room. Then in that case, the room amount value rent which will be receiving for the room will be taken as income from house property, and the other services which will be provided along with the auditorium will be taken as income from other sources. Yes, is it clear? Yes. So now let us move to the next part, that is treatment of unrealized rent. Treatment of unrealized rent. Deductions for the unrealized rent. Unrealized rent means the rent which we cannot realize from the tenant. So we will be considering any rent as unrealized only after seeing some conditions. Okay, we will be then considering it as unrealized rent. See, the first is the tenancy is bona fide. That means it is for generous purpose. Okay, for generous purpose. Okay. The next is that the defaulting tenant has vacated, or steps have been taken to compel him to vacate the property. That means we have tried a lot so that we can recover our rent, and if not so, then we have compelled him to vacate the property. Yes, and we have taken all the steps so that he vacate our property. The defaulting tenant is not in the occupation of any other property of the assessee, and he is not living in any other property of the owner. Okay, the taxpayer has taken all the reasonable steps to institute legal proceedings for the recovery of the unpaid rent. That means he have taken all the steps so that he can recover the rent, and he have also gone through the legal proceedings for recovering the unpaid rent. And if the assessing officer is satisfied that the legal proceeding would be useless, only then will be considering it as unrealized rent. Okay, now coming to next, that is area of rent or recovery of unrealized rent. It is given in the section 25A. Amount received in the respect of areas of rent or subsequent recovery. That means even though we have not recovered it, we have recovered in some other year. Okay, say it is of 2019, the amount say 3000 we have recovered of 2019, the year 2020. Okay, and at that time he is not the owner of the house from which for which we are getting the income at the rent, okay, of the house property. Also then it will be considered as income from house property. Yes, it is clear from this sentence only that amount received in respect of areas of rent or subsequent recovery of unrealized rent shall be deemed to be income from the taxpayer under the head income from house property in the year in which such rent is realized or received, whether or not the assessee is the owner of the property in that year. Even though he is not the owner of the property, also then we can consider as the income from house property for that assessee. Okay, I hope it is clear. Now let us see how we'll be computing the income from house property. So for that, I'm giving you a mnemonic. You can learn it from there also. That MF Hussein 6 elegance and gorgeousness. MF Hussein 6 elegance and gorgeousness. That means the marginal value, the fair rent, yes, of these we will be taking the higher amount. Yes, we'll be taking the higher amount. Then we will be taking the standard rent. And from here, from the higher value in the standard rent, we will be taking the lower value. The lower value will be taken as the expected rent. Yes, this will be the expected rent. Once expected rent has been given, yes, we have found out the expected rent, we will be finding out the actual rent. And from this actual rent, we can minus the unrealized rent. Minus the unrealized rent. And here only we will be doing minus unrealized rent. And if there is any vacancy, we can minus out that also. Okay, so minus out the vacancy also. So it has been remained vacant for 1 month. So for that month, we can deduct the rent amount. And then the G is the gross annual value. The gross annual value. Yes. So we have got how we will be calculating the income from house property. From gross annual value, we will be minusing then the municipality taxes. We will be getting net annual value. From this net annual value, we will be deducting again the standard deductions. Standard deduction of 30%. Yes. And again, interest on loan. This deductions I have covered in another video. This part 2 of house property. You can check it out from there. Okay. So then finally we will be getting this part will be deducted. Then we will be getting the income from house property. Yes, is it clear? Now let us solve some questions. Before moving to the questions, see these deductions under house property. First, we will be deducting the municipality tax from the gross annual value, right? So this municipality tax is what is the amount which we will be finding out from the municipal value, which will be given to us for the house property. So if it is 15%, we will be taking 15% of the municipal value to find out the municipality tax. And this municipality tax deductions we will be getting only when if it has been borne by the owner. That means the owner has paid the municipality tax. If the tenant has paid the municipality tax, we will not be getting any deduction. In that case, we will not be getting any deductions. Only the owner should pay. Only then we will be getting the deductions for the municipality tax which we have paid. Yes, for the financial year. Now come to standard deduction. Standard deduction is that means it is being covered in the section 24A. The standard deduction is 30% of the net annual value. That means we will be finding out standard deduction from 30% of the net annual value of the financial year. Okay, of the house property. Sorry, of the house property. Now, this for the self-occupied house property, it is very important that for self-occupied house property, the NAV always is nil. Always is nil. But this, if a person has more than two houses, okay, if he have three houses, say, for the two houses, he will be getting the NAV will be taken as nil, and for the third house which he is residing will be taken as deemed to be let out. I have already explained it. Okay, deemed to be let out. Yes, is it clear? Now let us solve some questions. So this question, municipal rental value has been given to us. We have also been given the fair rental value, the standard rent, the actual rent, and the municipality tax. So our this one mnemonic was MF Hussein. Yes, 6 elegance and gorgeousness. Right. So municipal value is how much? 28,000 has been provided given to us. Yes. The fair rental value is was 34,000. Given to us is 34,000. So we will be taking higher of this two value, municipal value and fair rent, and it comes out to be 34,000. Right. Now our standard rent has also been provided to us, that is 35,000, and we will be taking the expected rent as lower of this two. Yes, the expected rent lower of this two, the higher value and the standard rent. So it comes out to be 34,000. Right. Now we will be looking into it that any vacancies there are or any unrealized rent has been given to us now. Nothing has been provided. That means the house was occupied for full 12 months, right? For 12 months it was let out. So 3,000 into 12 months, it comes out to be the actual rent will be 36,000. Yes, and now we'll be taking higher of this two as the gross annual value. The higher of this two, yes, as the gross annual value. So gross annual value comes out to be 36,000. Right. Now, if any municipality tax is given, we will be deducting it. Municipality tax. So before deducting the municipality tax, you see that whether it has been paid by the owner or not. It hasn't paid by the owner, so you will be getting the deductions of 2,500. Yes. So 2,500 will be deducted, and we will be getting 33,500. If this municipality tax was being given by the tenant, yes, in here it has been written as tenant, then we will not be getting this deduction of the municipality tax here. Yes. Now come to next question. Raghu has two houses. Both are self-occupied. If both the houses are self-occupied, then what will be the annual value? We know of a self-occupied property for two houses, the NAV will be nil. Yes. So this will be the answer. Of both the houses shall be nil. Next question. Unrealized rent is a deduction from. It is always deducted from the gross annual value. Or we can deduct from the actual rent also. Yes. So GAV minus we do the this now. Unrealized rent amount. So this is the question which is being asked. So I hope it is clear. And the other questions of house property is being covered in the part 2. Yes, please check out this video for the questions. And also I will be covering the section 24B as the deductions for interest on loan. Okay, in detail. So thank you.